Welcome back to Global Money Talk live from the New York Stock Exchange. Joining us today is visiting Professor Namuh Rhee of Yonsei University in Korea to discuss Korean investors' interest in the U.S. markets. Professor Rhee has a distinguished career in finance in Asia, having held senior positions at firms including Merrill Lynch, Nomura, and Samsung Securities. Thank you so much for joining me today, and thank you for coming on the show. So it's great to have you today for a market insight. For all of our viewers out there, can you please start out by telling us a little bit about your background?
Good morning. Thanks for having me. My name is Namuh Rhee. I'm currently teaching financial analysis and corporate governance at Yonsei University in Seoul, Korea. I have had equity experience for about 30 years. So I retired in 2016, but prior to that, for 30 years, I was on both sell side and buy side. As you spoke, Remy, I was co-managing Bank of America Merrill's office in Seoul. I had some regional leadership position with Nomura in Hong Kong. So it was an exciting time, but pretty happy to engage with young people, but also happy to meet our audience here.
And of course, as you're joining our audience, it's very helpful to know that you've been on both the buy and sell side as well. And I also think that having experience through different cycles, whether we're talking about market cycles, different monetary and fiscal policy cycles, I think that's very vital to understanding how global markets are affected. So it is our understanding that there is tremendous interest for U.S. markets in Korea. So can you tell us a little bit about this and how significant is it?
I think in the past 30, 40 years, Korea opened up its capital market, the equity market, to foreign investors in 1992. So it was really one-way capital flow from the U.S., from Europe into Asia, but Korea was a very had a lot of exciting companies long time ago. So, very large U.S. Mutual funds like Fidelity, Capital, T. Rowe, Wellington, but also a lot of high-profile hedge funds were very active in Korea. So a lot of money flowing in from the U.S. to Korea. But I think past couple of years, since COVID in particular, there has been a structural money flowing out of Korea into U.S. equity market, and it was an eye-opening experience for a lot of Korean retail. And I think taking such a risk, investing overseas in the U.S., is pretty challenging. You're dealing with a lot of risk, but it was quite a rewarding experience for the Korean retail individual investors.
And you mentioned the pandemic, and of course it did affect the global economic landscape. So give us a sense of what the economic landscape looks like right now in Korea.
I think like elsewhere, a lot of Korean individuals were at home during COVID. And a lot of the local brokerage firms have created a facility that the Korean retail could just open an account pretty easily, convert Korean won into US dollar, and start trading Tesla, Apple, Nvidia, P&G, quality names. So it gave an opportunity for Korean retail to broaden their financial asset. And it gave them opportunity to really learn how top quality American companies are run, and also, how they treat their shareholders very fairly. Because I think in Korea, we got a lot of many world-class companies, Samsung Electronics, Hyundai Motor, LG Electronics. But in terms of how the controlling families, the management, the board treat shareholders, still there's a long way to go.
And I understand that Koreans have been resuming the years-long trend of buying U.S. stocks, but earlier this summer, especially beginning on August 5th, we saw the sell-off in U.S. markets, and at the end of last week, in terms of the major U.S. stock averages, they were near or close to record highs. So did the recent market rout affect Korean investment in U.S. stocks?
Locally in Korea, the retail investors actually trade more short term. But when it comes to overseas investing, particularly in the US, I think about 95% of international equity exposure from a Korean retail perspective is in the US. And they haven't really traded much. They kept adding, putting more dollars into work. So I think they would rather take advantage of the weakness. And as you mentioned, some of the profit taking we had in August, I think Korean retails took it as an opportunity to build position at a cheaper price. So they didn't take profit. They actually took advantage of it.
And I know that you touched on this, but in terms of the August 5th sell-off, in terms of what we saw here in the U.S., in terms of the Mag 7 trade, that was something that we saw being unwound, as well as the yen carry trade. But here we are, the middle of September, about to head into the Fed Reserve meeting, the two-day meeting set to kick off on Tuesday, the rate decision on Wednesday afternoon, at least here in U.S. time. Since you mentioned Mag 7 in particular, Tesla stock, I understand that Koreans hold Tesla stock followed by Nvidia and Apple. How have investments been affected when it comes to recent volatility in the Mag 7 names?
If you look at the top American stock holding by Korean retail, the first is Tesla. They account about 15% of the total US stock exposure. So in terms of dollar, about $15 billion and 2% of the outstanding shares of Tesla. So there has been a lot of volatilities, but Korean retail has pretty high conviction into long-term growth story, self-driving, robo-taxi. So they bought into these long-term theme. The second largest holding is Nvidia, about $13 billion. I think Korean investors are very familiar with semiconductor sector because we got top semiconductor names in the memory chip space. So they know how to play semiconductor and automobile, and Tesla is auto/AI stuff, right? And the third and fourth names are Apple and Microsoft respectively. So it could be a little too geared to technology space, but I think Korean investors have been pretty smart in accumulating position in the companies with a strong business model and a good track record.
And building on what you just said and something that you mentioned earlier, would you be able to weigh in on the so-called Korea discount of lower shareholder returns and depressed valuations in the stock market, since Korea is home to global tech giants, as you mentioned, such as Samsung Electronics and automakers, including Hyundai Motor?
I mean, we call it Korea discount, so Korean equity trading at a sharply lower valuation than their counterparts in the US, Taiwan, or Japan. But that has been going on for 30, 40 years. So even when I started my bank in Korea in the early 1990s. But unfortunately, that discount still exists because we got many world-class companies, but we also have a very unique structure of a controlling family. Lee family for Samsung, Koo family for LG, Chung family for Hyundai, but some of them are very obsessed over their control, and sometimes they don't really pay respect. They don't treat the minority shareholders fairly, so it creates a lot of risk for investing in equities, and as a result, long-term equity return in Korean market has been pretty poor. So that's why the local retails would rather find exciting opportunities with American equity, with the blue chips in the US.
And before we move away from this, could you dive deeper into how that works in terms of the controlling family? So is that very similar to what we might see across the Pacific from the US point of view in terms of what we see in Japan, or what are some of the similarities and differences there?
I mean, the conflict of interest exists in almost any country. I mean, in the US, from a corporate governance perspective, conflict is between shareholders and executive, and that's where the board step in and try to monitor and create long-term incentive. I think in Asia, particularly in Korea, and maybe a little so in China as well, the conflict is more between the shareholders, between the controlling shareholders and minority shareholders. So the controlling families could come out with some unfavorable capital transaction at a very unfavorable merger ratio that could really rip off the minority shareholders. And we saw such a case with a leading Korean chaebol called Tucson, which really made investors nervous, and also regulators have been scrutinizing the bad practices. So I think it's something that I think Korea we need to work on and try to improve. If not, we will see more retail money leaving the local capital market and moving overseas, and which is structurally very negative for the long-term growth of this country.
And I do want to ask you more about what we're seeing in terms of Korean interest in the US stock market. So taking a look at this interest that we're seeing, would you say that it's mostly institutional or retail or a combination of both?
Korean retails put in about $100 billion, so their total exposure to US equity is about $100 billion. Institutions have a several times bigger exposure, so they are Korea's sovereign wealth fund called KIC, Korea Investment Corporation, as well as the mandatory national pension scheme called NPS. So the two institutions are the key drivers of the institutional flow into the US equity. But if we look at the very long-term performance of US equity, on average, they have been around 10%. Past 10 years have been slightly higher. So that is almost 2 times the total equity return you have achieved in the local market. So there has been a structural money moving in, the institutional money from Korea past 10, 20 years. Now it's the retail money since COVID trying to take advantage. And dollar has been pretty strong for a couple of years, and I think we may see an inflection point, as you just discussed in the previous show. But it's more of a very structural view to take advantage of the getting exposure to world-class companies across multiple of sectors with a good track record.
And when it comes to the opportunity, that part is obvious, but what are some of the challenges here?
Well, I mean, putting money to the other side of the planet, always there's a risk, right? American investors investing in Asia, you always worry what could happen overnight, right? That's why portfolio managers fly to Asia, do a company visit, meet the management, but also same, right? I know U.S. has many very well-run world-class companies, but from Asian investors, Korean investors, it's a risk because you are investing in a country that you may be less familiar than locally, but also you have a currency exposure. You have some risk regarding the disclosure because the locals here may be more familiar with Samsung, Hyundai than they know about Starbucks, Apple, or Nvidia, right? So there are many risks, but I think even factoring those risks, the local retail here in Korea, but I guess what I heard is from Japan, Singapore, other Asian countries, they find more U.S. equity story very appealing.
And before I move away from some of the challenges, I do understand that when the August 5th market sell-off happened in the U.S., a significant number of individual investors in Korea were affected given the U.S. daytime trading halt. So in terms of resolution from incidents like that, what is it like for retail investors in Korea when a day like that happens during daytime U.S. trading hours?
I understand most of the retail investors in Korea, those put money into the U.S., they are long-term investors. They don't trade on a daily basis. But I understand at the same time they're also short-term uh, day traders. So they were affected by some of the irregular market activities or trading shutdown. I think the retails actually discussed with the brokers here in Korea if they were financially affected, how they could be compensated for it. So, but the majority of the investors here put their money for long term. They don't trade that much.
And at this moment, I do want to take a brief look at what's happening live here in terms of the U.S. trading session. So very quickly, let's take a look at the major U.S. stock averages on this Monday morning. We are, right now, we are seeing the Dow Jones Industrial Average pare back from earlier gains at the market open. We saw the Dow Industrials up over 300 points, but right now, the Dow is up 81 points or 0.2%. Meanwhile, for the NASDAQ Composite Index, it has been in negative territory all morning, but this does come on the heels of gains that we saw last week. Right now, the NASDAQ is down by 150 points or 0.8%. And very quickly, taking a look at the S&P 500 in New York morning trade, that index is lower as well, down by 0.2%. And now we will continue our conversation about Korean investors in the U.S. stock market. So, Professor, can you tell us when interest in terms of Korean investors in the U.S. stock market kicked off? When did this all begin?
You mean when they started to buying in a big way?
Yes.
I think it was, I think formally, uh, the Korean government allowed the investors to put money in overseas assets. That was about 30 years ago, but I guess it was very difficult to open an account, convert into US dollar, and you didn't have much US stock research, so it was very inconvenient and also quite difficult to invest in the U.S. equity. But I think the COVID, everything changed. So it became very easier for local retail to just open an account. So if you have an account with a local broker for the local stocks, you can just hit the button and open a foreign account, and then you can convert into U.S. dollar, and you can just place order with your button, right? So it became very easy, and it was pretty volatile for a couple of months. But I think Korean investors know very familiar with a couple of sectors: the tech, automobile, the telcos, and some of the fast-growing growth sectors. So they felt quite comfortable putting money into U.S. equities um, in those sectors, and a lot of those companies compete directly, indirectly with their Korean counterparts, which Korean retail know already. So they felt pretty comfortable allocating money into the U.S. equity, and their performance have been very good. So they're pretty happy.
And you mentioned the pandemic, but were there any other catalysts in terms of this increased interest in U.S. stocks?
I think what's very unique is Korean retails like to buy single names. So I told you it's the Tesla, Nvidia, Apple, Microsoft. So sometimes ETF, but Korean retails like put money into the single name. I heard that Japanese investors like to buy a broader market, so buy the S&P 500 ETF offered by some of the index funds, right? So it's a little different approach, and the formula has worked very well because I think given the lot of knowledge and experience in these sectors, and I think also the local brokerage houses have started to produce Korean language research on American names. Maybe they don't have a forecast, but whenever there is a results or some key events, the local houses have started to translate into Korean. And I had an interview with Dan Ives 2 weeks ago, and it's pretty well known figure in the tech space. So the local retails are getting exposure in terms of the information flow, but also having an opportunity to meet a lot of some high-profile Wall Street people, and I think that's also another way to become more familiar with the U.S. equities.
And it's very interesting you mentioned Dan Ives because he's frequently here at the New York Stock Exchange on other media outlets, and we hear about his analysis of some of the major companies out there. And I know that he was recently in South Korea, so a very small world indeed. Now, very quickly, I do want to move on to asking you about this interest that we're seeing in U.S. stocks from the Korean market. But tell us whether you think this momentum is structural.
Well, I think it's very structural. I was in the Bay Area back in August. Had the opportunity to catch up with some of the engineers who work at a big tech companies in the Bay Area. I had an opportunity to try the supervised full self-driving by Tesla. I had the reservation at the showroom and an opportunity to drive. And I think a lot of what American companies are doing are very structural. There is a very long-term growth story. So I think maybe the valuation is not very cheap. A lot of stocks, I think, in my view, are pretty fairly valued, particularly if we look at the current stock prices and index level. We had the market fully recovered since the early August sell-off. But I think, from a local retail perspective here in Korea or a fundamental perspective, I think, uh, you should not worry too much about the valuation and you just continue to build position. And whenever there is a sell-off, it's a great opportunity to take advantage of the weaker valuation, right?
And I do want to ask you about accessibility. So tell us whether this interest is merely trend following, meaning are Korean investors simply chasing winners, or as you mentioned, we did touch on the structural. And another thing that you mentioned is ETFs. I understand that Korean retail investors were active purchasers of ETFs listed in the U.S. in July, and we're still waiting to see the numbers for the latest month to be finalized. But given that most of the top 50 overseas securities purchased by Korean retail investors were ETFs listed in the U.S. as well as Japan, can you give us insight into investor demand?
Well, I mean, if we look at the top five holdings by Korean retail in the U.S. equity, the fifth stocks, right, is leverage QQQ. I think it's ProShare, Ultra Pro. That's Koreans own about $4 billion here. So I'm just a little worried that, I mean, these tech stocks already takes a lot of risk in their business model, and I think retail really don't know sometimes the risk they're taking with these exposure. And if you're leveraged twice or if you triple leverage, I mean, you are assuming massive risk. And always the market could go the other way. There could be a profit taking, a sell off, and then you could get really hurt. So I wish that Korean retail, like Japanese counterpart, really buy the broad index, right? Have a very diversified exposure, or have exposure through single names, the quality names, a good mix across multiple of sectors. I mean, uh, getting exposure, taking a risky bet on leverage ETF, I don't think that's a good way to play. Going back to your earlier question, I think there's a little bit of uneasiness in Korea because so many investors here, particularly the younger population in their 20s or 30s, have become very frustrated with the local market here that have continued to underperform over many, many years. So I think it's more a structural issue. Younger people cashing out from local equity and putting money overseas. And I think that could be a structural trend. And if you don't have a dynamic capital market, your economy will suffer. You cannot really give an opportunity for the startups and younger companies to raise capital. So I'm also worried as well. It's a good for the U.S. market, having a lot of foreign investors come in, create additional demand, and a lot of these money are long term. But from a local perspective in Asia and Korea, it's something that we are quite worried, and we need to keep on monitoring the trend.
And could you expand on this local frustration that you are observing when it comes to especially the younger retail investors in Korea?
Well, I mean, I teach college students, right? So we just have started a new semester. I do a little survey, and the majority of college students that I have as my in my class, they would rather, and they currently have much more exposure to U.S. equities than local equity. And I think that is based on their experience, and that is what they hear from their friends. Don't put money into local equity where you could be badly treated by the controlling family. So, put your money overseas, particularly in the US market. And there are a lot of names that young Korean populations are very familiar with, not just the tech, but, in the consumer space, whether it's Amazon, Walmart, P&G, Coke, Pepsi. You have all these great brands, consumer brands that have consistently delivered return and paid some generous dividend. So, which is something we really need in Korea. Yeah.
And I do want to ask you, Professor, are Korean investors meaningful to the U.S. market?
I think I when Elon Musk wanted more votes to support his package. I think was it in June or July shareholders meeting. I thought he would fly to Korea because Koreans we own 2% of the Tesla outstanding shares, but he didn't. But I think as we have more and more money flowing into Asia, I think at this moment Korean retail is less relevant, but the two major institutions that I mentioned earlier, Sovereign Wealth Fund KIC and the National Pension NPS, they are very large investors, so they have already become a big force in the U.S. market. But I think if we see more structural money from the Korean retail moving into Korean equity, into the U.S. equity, I think they would also be one of the major force to in terms of creating additional demand in the U.S. stocks. But it will take time, at least for the Korean retail to become more relevant. It's going to be currently it's more two major institutions in Korea.
And do you expect that to change in the near future?
I think those trends will continue. I think it's very structural because if you look at the long-term U.S. equity return, they are much more superior than most of the Asian countries, and particularly against the Korean equity. So I think the taking risk and investing in U.S. equity has been a very worthwhile. It's a very rewarding experience for the Korean retail. So I think the money flowing out of Korea into US, I think that's more of a structural long-term story.
And of course, you've been through many market cycles, whether we're talking about what's happening in equities or just globally in terms of fiscal and monetary policy as well. So if we do see an eventual downturn here in U.S. equities, do you expect to see a change in demand from Korean retail
Well,
investors?
maybe some investors could become a little nervous, and if the U.S. currency, instead of strengthening, starts to depreciate. But I think a lot of retails believe in the U.S. equity story. They believe in the business model of the very well-run American company. So I don't think there will be a major reversal in the trend here. Yeah.
And also, out of curiosity, 2024 has been a big year, not just for the markets, and there are a lot of expectations for the Federal Reserve, especially this week ahead of the September meeting. But it is also a U.S. presidential election year, and I'm sure overseas in Korea there has been a lot of focus when it comes to the election, and I'm sure there are different expectations of what the implications could mean in terms of a Harris administration versus a Trump administration. So what is the sentiment over there when it comes to the U.S. markets as perceived by investors there?
I think whether it's going to be 25 or 50 basis point, I don't think that really matters. I think once Fed starts to ease its policy, I think the trend will continue for 1.5 to 2 years, and that would support the equity valuation. I did watch the ABC show between Trump and Harris, so the U.S. presidential election is very closely monitored by Koreans, not just because the people here have U.S. Equity exposure, but the U.S. policy implication, any change would have a direct effect on the Korean businesses and into the business strategy and corporate earnings of the companies listed in Korea. So that's also another reason why people here in Korea and across Asia, we're closely monitoring the November U.S. presidential election.
And it is hard to believe, but less than 50 days until November 5th, so the countdown is indeed on. And Professor, last
Yes.
but not least, before I let you go, any words of advice to those who want to build businesses catering to Korean investors who want to invest in the U.S.?
I think the story is quite structural, as I have explained, and a lot of Koreans are very familiar with the English document or, working, investing in overseas environment. So I would recommend a lot of U.S. has a lot of people with deep, broad experience. So open your eyes, and I think there's a lot of money trying to flow into the U.S., not just from Korea, but across from a lot of Asian countries. I think there will be a good business opportunities over long term.
And we have about 60 seconds left, so before I let you go, I do want to ask you about your YouTube channel. So what opportunity do you see, and also how do you feel access to financial education and information has changed?
Well, I have run my own YouTube. It's Good Stock, Bad Stock by Namuh Rhee. The idea is not really for the financial objective, but I really created YouTube so that we have a equity culture and people learn the why it's good to have a equity exposure to a well-run companies, because you could create a lot of good financial income. So the large part of the content was allocated to introducing, explaining what top-notch American companies. And I think for those my audience, that has been a pretty rewarding experience. And also I talk a lot about Warren Buffett's investment philosophy, how to manage your risk, so how you could be a very good long-term investor.
Okay,
So,
Professor, well,
trying to-
we'll have to wrap it up for today, so thank you so much for joining me, and that will do it for Global Money Talk Live from the New York Stock Exchange. We're so excited to bring you daily coverage here on Sampro TV. We'll be back bright and early tomorrow. Have a good day.